Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, January 3rd, just after the markets close. Before we start, please know that all of us at ToniTurner.com wish you and your loved ones a happy, healthy, and very prosperous new year. And now, on to the market. Well, Wall Street's main indexes moved higher today as technology stocks rebounded from a losing streak, while investors geared up for potential policy shifts under the incoming Trump administration. All of the 11 S&P 500 sectors were trading in positive territory, led by a rise in consumer discretionary stocks. So that's nice. Technology stocks also advanced after falling for the past 4 sessions, and NVIDIA drove gains in all 3 major indexes. And on that, let's go into 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today, as you can see over here, the SPY closed right at $591.95, and just below the 50-day moving average, the green line, which is coming up here, is kind of hitting its head on the 50-day moving average, which is coming in at $593 and a penny. And of course, we see the red line, the 20-day moving average, coming in here at $597.78. Now, today, the SPY closed at this level, and that is about 3% below the all-time closing high, which we've pointed out before in previous sessions. That was on December the 6th, that little tiny green candle you see. December the 6th, we had an all-time closing high for the SPY at $607.81. Now, ever since that all-time closing high, we started seeing a little weakness come in here. The SPY kept walking along over the 20-day moving average for a little ways. Then all of a sudden here, boom, on December 18th, that was the day Fed lowered interest rates 1/4 point. The market fell really hard on that day, down to $585.89. And that was when the Fed officials said that, well, we're not going to do that many, lower that rates that many times in the coming year. And so the market didn't like that at all. So it fell to $585.89. Now, it held at that level for one day, but then it started rallying and moving up. But it gapped down on the 20th to $580.91. We can call that 581. We can round it off if you like. So now that level, especially since price started rallying from there, rebounded a bit, thank goodness. That level has created a new potential support zone that we want to keep an eye on. So I'm calling it 581. So from there, it rallied back up to the 20-day moving, back up through the 50-day, back up to the 20-day, up to $601.34, could not get over that 20-day moving average. You see how powerful these lines can be sometimes. Couldn't get over it, and then fell back down to the 50-day moving average again. Thankfully, used that 581 level to hang on to. Didn't go below it. That's where the buyers came in, at least for the time being. And then moved back up to the 50-day moving average, almost within a couple of points or a point, I should say, to where we are now at $591.95. Now, looking back, actually, and we've talked about this before, all the way from October 2024, looking back, or 2023, we've actually, for the last couple of years, the SPY has been a lot of the time, certainly not all, because that's not possible, but a lot of the time the SPY has been moving up that 20-day moving average. Now, of course, that includes the usual pullbacks. That's how cycles are formed. Cycles don't go straight up, and we hope not straight down. They move like this if it's an uptrend, and there's a little cycle in each one of these, and the bigger picture, of course, is a complete cycle sometimes, or a big move up like this. So far, we haven't seen the other side of this. We don't particularly want to, but if that's all good, and the 20-day has been really helpful, now we're in a spot here where we see, can the SPY move back up over the 50-day moving average, come back up over the 20-day, and start again. So we need right now, we need for the SPY to hold this 593 level is the 50-day moving average. Ideally, we wanted to get up and over it and back over the 20-day and start again. If that can't happen, and it may not, maybe profit taking comes in, then we need for it to ideally stay above the $581 level, or at least stay above the October low, which comes in at 568, because we want to continue as much as possible. Of course, a series of higher lows, certainly, and higher highs. We also have more resistance up here at the 20-day moving average at 601, and then, of course, up at the all-time high here at 608, there's more resistance. And again, we want to hold that level at 581 or 568 if we have to. So as we go into the new year, we will see what happens. As always, please trade wisely and keep an eye on your protective stops. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. As you all know, this is the ETF that follows the NASDAQ 100, the top non-financial stocks in the NASDAQ stock market, including the large cap momentum stocks like the Magnificent Seven, of course, are all in that, the NVIDIAs, Metas, Apples of the world. Now today, the Qs right here closed at $518.51. That's about, not quite, about 4% below the all-time closing high up here on December 16th at $538.17. The Qs also closed today below the 20-day moving average, which is coming in at $523.10 right now. But of course, just trading above, nicely above, unlike the SPY, it managed to make it back above the 50-day moving average. The 50 days coming in at $511.21, and again, we closed today at 518.58. Now we can look here, a quick look back at July shows us at the time that all-time closing high came in at 503 at that time, and then fell really hard, fell 16% down to August 5th lows at 424. Then rebounded for 3 weeks up to the August high at $486, rolled over to the September low at 448, then rallied back up through the 50-day and 20-day moving average, and right here the 20-day crossed over the 50, which is always a bullish sign when a shorter term moving average crosses over and moves above a longer term. That's always a bullish sign. Sometimes when it's the 50-day, we call it the Golden Cross. Anyway, in September and October, started walking up the 20-day moving average, fell down right before the election, then after the election rallied right up, and had that November pop, then back down again, but only to the 20-day. And walked along that 20-day moving average, and again up to this recent all-time closing high at 538. From there, we had the same fall back down here on December 18th and 20th. Fell down to 509 right here, down to the 50-day moving average, but stayed above it, actually made a higher low here, which we appreciate. Then back up, a rally up to 530, then back down to retest. Price likes to retest where it's been before. And usually that really includes when it's made a little pivot low here. It likes to go back and see if that was real. And so far it was, it held up. So now we have potential resistance here. We have potential resistance at the 20-day moving average, again coming in at 523, and of course that 538 high, and down here about 50. It's about 530, I think, was that high right there that I mentioned before. So that's all potential resistance. We have support at the 50-day again at 511. We have the October highs come in here. That's right. We need the October highs come in. That's potential support at 501. Again, October low at 584 down here. And of course the 200 days coming in here down at 475. Now what we can draw here, which isn't my favorite, only because I don't like the news it could give, is that we could have a short-term triangle forming here. Triangles, as you know, usually the closer the lines get together, if price gets compressed and compressed, then it either breaks out or breaks down. That's what happens with triangles. So we can see potentially one forming here, although I'm not going to stare at that for a long, long time. For bulls, we do want, but it's there. So if you want to keep your eye on it, because we've got these low and this retest here, and then that falling down. So if price can move up above that, which would be basically above the 20-day, it's going to be very bullish, at least in the short term, and of course lower down below 501 would be less bullish for sure. So again, trade wisely and keep your protective stops in place. Our third chart today is a daily chart of the Global X Hydrogen ETF, symbol HYDR. Now we've traded this before. It's tried to move up, but really hasn't done a good job of staying higher. But when I saw this pattern today, I became encouraged. The Global X Hydrogen ETF, symbol HYDR, it has 27 holdings. Top holdings are Bloom Energy, Plug, Fuel Cell, Ballard Power Systems, and more. Again, 27 holdings. The HYDR closed today over here at $25.33. Now, you can't see it on this chart, but you know I always look at long-term charts before I put them up on the screen. And so I went into a monthly chart of the HYDR, and what that showed was this ETF was initiated in July of 2021 at $122. How about that? $122.50. Then it immediately shot up to an all-time high in November of 2021 to $146. Then it started falling in a downtrend pretty much. I mean, lower highs and lower lows. I mean, it bounced up like what you can see on here, but it just kept going basically lower until you see the recent low on this chart at $20.17. From there, it rallied and this was the all-time low right here, I hope. From here, it rallied up to, back through the 20-day, the 50-day, back up to this high. It tried to go over the 200-day on this daily chart, but couldn't stay above it so far. And pulled back down to the 50-day moving average at about 23. And then rallied up to where we are now. But when looking at this, go back mentally to the long-term chart, what I saw on that was something that intrigued me. You can't tell on this chart so much, but in the last 6 months, more volume has been coming into the HYDR, and you can see that on a monthly chart much more easily than you can on this chart. So when price stops moving lower, And then on high volume for this particular ETF, it starts coming in and price starts moving sideways to higher. That is usually a pretty decent signal. So anyway, I can also see here a potential cup with a handle, which is a bottom reversal pattern. Cup with a handle potentially forming here. It may have to form more of a handle before it goes sideways. We could put the bottom of the cup here. We could put it up here and then say this is the handle forming, and then the breakout, if there is one, would be like that. So see how that's a cup. Potential break. Now, I don't know that it's going to break out, but it's a potential one. So and again, right now it's trading at $25.33, right below the 200-day moving average, which is coming in at $25.81. It is back above the 50-day, and the 20-day is back above the 50-day. And the 20-day is coming in at $24.38. So in the coming week, if the HYDR can stay above the 50-day moving average, which is coming in at $23.41, if it can stay above that, I'm going to buy a small position of the HYDR in my trading portfolio with a stop down here at $22.75. If and when the HYDR can rise above $26, and that will be just above the 200-day moving average, if it can rise above that and stay above it for 3 consecutive days, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the HYDR hydrogen ETF in the coming weeks. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless trading programs. I like to talk about how to swing trade successfully. That program shows you how to enter during upswings right as it's starting, grab the sweet spot from a price move, and pocket your profits before the price starts lower. And as I usually draw for you, this is an uptrend like the one we were just talking about on the prior chart. This is an uptrend. And in swing trading, typically the trades last from 3 to 5, maybe 6 or even 7 days. And when you swing trade, you do this. As I always say, you take your goal is to take the center out of the Oreo, the middle out of the Oreo, so that you're in when the going is good and out when it isn't. So you'll discover with this training how to trade with my sleeping tiger setup and use it over and over and over again to make consistent profits, which, by the way, this is the setup I always use to trade, swing trades. Our new low price for this program is only $187, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever-popular 7 steps to successful trading, again to how to swing trade successfully, how to trade the trend to profits, I love it, how to read charts, great for novices, 3 winning setups, great for short-term traders, and how to bottom fish like a pro, which I really like as well. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you'll have unlimited access to learn at your own pace. You can go in whenever you want. So be sure to check out these programs by going to the link on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.